Housing loans are at record levels. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your Stein coffee and let's look at some latest statistics from the ABS. Record housing loan commitments in November. Well, there you have it. That fuel on the property bonfire, well, it's lit a spark, hasn't it? It's flaming up. The total value of new loan commitments for housing and the value of owner-occupied home loan commitments both reached record highs in November 2020. Just as we've just had our first recession in 28 years and we've got record high loan commitments. What does that tell you? And prices haven't adjusted as much as you'd expect. The total value of new loan commitments for housing rose 5.6% to $24 billion in November, seasonally adjusted, a 23.7% increase on November 2019. So nearly a quarter up on the same time last year. The value of new owner-occupied home loan commitments rose 5.5% to $18.3 billion in November 2020, a 31.4% higher than November 2019, so nearly a third. ABS head of Finance and Wealth, Amanda Senivratani, said loan commitments for existing dwellings rose 5.9% and were the largest contributor to the rise in November's owner-occupier housing loan commitments. Okay, now here's a concept that I need to make sure you're all aware of. The candle-on effect. Refers to the change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point and therefore a specific flow path through the economy. Now, what we're seeing here is home loans. What do home loans do? This is a flow path through the economy, everyone. This is money essentially being created. Because the bank, when the bank, gives you your loan, they don't take it from Jim's account or someone else's account. It's created through that process. They have the capacity to create a certain amount of money depending on how much, it's a fractional reserve system. So that money is created out of nowhere. So the money supply brought about by housing is 25% bigger than last year, and the value nearly 33% bigger in this month. What's that going to do, everyone? First recession, money supply going up. What's the candle-on effect telling us? Well, we will get a bubble. The cost of this commodity of housing is going to inflate relative to other things. And they don't measure it properly in CPI. If they did, the interest inflation rate would be about 0.5 higher than it should be, average. So they probably would have actually hit their target. Then maybe we wouldn't have such a crazily low cash rate. I really think they need to take housing into more into account, not just the land or the land value as well, because it affects people's ability to spend because people need to save more to get in. It's all a mess. The value of construction loan commitments grew 5.6% in November, rising 75% since July. Home builder. This follows implementation in June of the government's home builder grant in response to the pandemic. Other federal and state government incentives and ongoing low interest rates also contributed to the continuing growth in new housing loan commitments, she said. Owner-occupier first home loan buyer commitments. So in November, the number of owner-occupier first home buyer loan commitments rose 3.1%, reaching 13,905. A 42.5% rise since the start of the year. First home buyers are up 42%, everyone. This is the highest level since October 2009, when similar rapid growth was spurred by the temporary tripling of the First Home Owner Grant, which was part of the Commonwealth Government's economic stimulus package in response to the GFC. Are we starting to see a pattern here? This is the thing. There's no political will in Australia to allow the property market to correct. And you can't say it's one, or Labor or Liberal. There's no difference. Who was in charge then? It's all the same, everyone. It's housing. Housing. It's the tool that they use to give us all a kick. And the problem is future generations pay for it. It's taking longer and longer and longer for people to save up to get into a house. The luxury of having one person working in a couple, being able to support a family and get a home and have holidays, that's long gone. That's a boomer meme. Even probably before the boomers. So states and territories. The value of owner-occupier home loan commitments rose across the largest state and territories, but showed mixed results in smaller ones. Victorian owner-occupier home loan commitments rose sharply, up 19.6% in seasonally adjusted terms in November, reflecting a surge in housing market activity as the restrictions were eased. So loan commitments for an investor, housing and personal finance. The total value of loan commitments for investor housing rose 6%, reaching $5.6 billion. So it's not the investors, guys. It's not the investors. They're not pushing it. The value of new loan commitments for fixed-term personal finance rose 13.2% in November, seasonally adjusted, mostly due to increased commitments for vehicles. The ABS appreciates the continuing support of APRA and lending institutions in providing the data. Okay, so let's have a look here at some of the lending indicators. So, wow, there you go. So households, new borrower accepted loan commitment, seasonally adjusted. Households, 23% year change. Owner occupiers 31%, investors 3.9%. Personal fixed term loans are up. Business construction loans are down 62.1%. Which part of the economy is the government stimulating? I wonder. Wow. But it's typically a volatile series. Well, this, even if it is volatile, this tells me that's a monthly change of 50%. But that tells me that confidence for business, maybe short term it's high, we'll have to see long term. Property purchases are down 7.8% on the year, but they're up 6.7%. And we'll see here, this is all just what we've looked at. Let's see what other, then there are no other charts. Oh wait, here we go. So new loan commitments, total housing season adjusted. So here we have total, excluding refinancing, there's owner occupiers and there's investors. Look at that, everyone. This is the owner occupiers, first home buyers are just flooding in to the market. The investors, they've been heading down since the peak. New loan commitments, personal fixed term loans, values are strained, larger purpose. We can see, what do we have here? Total is up. Personal investment excluding housing is, pretty dull. Road vehicles is pushing it up. People are buying cars. New loan commitments, personal fixed term loans, season adjusted for smaller purposes. What do we have? Refinancing down, purchase of other vehicles and equipment. Everything's pretty. Travel and holiday. Travel and holiday. Remember we looked at that article about the, pretty much, it felt like a paid piece for ABC of all places to get into share investing. And there's this one city worker who was, getting into travel because she thought it'll go good, maybe in the long term, but I hope she's not a bag holder now. She's just buying into travel stocks. New loan commitments, business, finance, seasonally adjusted. We can see, so construction, okay, that is a volatile series. And housing owner occupier. Construction of dwellings, 94.4% year-on-year change. Yeah, okay. That's home builder right there. There you go. There's your economic activity. This is why they're doing it, everyone. This is why they're doing it, to get money moving in the economy. The problem is, it'll overheat it. So new loan commitments for housing by purpose, owner occupiers in light blue, and investors. So there you go. Yeah. So new loan commitments for owner occupiers by purpose, and we've got, there you go, purchase of existing dwelling, construction is up. Yeah, I guess we can't be surprised. By state. Okay, New South Wales rocketing at the top. Then you've got Queensland, Victoria, then look at Queensland, everyone. Look at Queensland. Wow. We're going to the moon. Everyone's up. Even the little ones, a little bit, not that much, but wow. The big states are just going crazy. People are piling in. Investors. So New South Wales are up. Queensland is slightly up. Everyone else is a bit subdued. So what's this? Loan commitments to residents funded in the month, including internal external refinancing. Okay. We can see here. What do we have? Nothing too dramatic. Total variable loan rates are going slightly up. Total fixed loan rates are going slightly down. New loan commitments by purpose. So you've got residential land, owner occupiers, investors. So owner occupiers are kicking us there, they're everywhere, everywhere, everywhere. First home buyers. The total, the number of owner occupiers, first home buyers increased 3.1%, as we said. New loan commitments to owner occupiers for first home buyers. So total in Australia 35% up. New South Wales 30% up. 38 for housing. 34.6 Queensland. I mean, there you go. 43% in Western Australia. It's all up everywhere. What do we have here? I mean, yeah, guys, people are jumping into housing. First home buyers are jumping into housing. Home builder is working. Home builder is working. And what's going to happen next time? We have another recession. The government's going to do the same thing. But the problem is you can't... Well, how long can they put off the consequences of this? When will future generations say, I've had enough? And is there ever going to be a political will to allow the market to adjust? As always, guys, thanks for watching. Like, share, subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. Support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone, and I will see you all next time. Bye for now.